The phenomenon of sovereign wealth funds is global. There are currently 84 sovereign wealth funds in operation, with assets amounting to $5.9 trillion. The number of existing and potential new funds exceeds 100. We identify 4 key poles in terms of assets under management: Middle East, China, Norway, and Southeast Asia. In sum, these 4 regions account for 80% of the industry assets, showing a strong geographic concentration. The average deal size of the top 5 deals in the last 5 years was approximately $3.7 billion. However, in 2013, this increased to about $4.6 billion. In 2013, the largest foreign acquisitions by sovereign wealth funds were 2 private deals of $5 billion each. Mubadala signed an agreement with the Guinean government, and QIA agreed to invest $5 billion in a petroleum complex in Malaysia. Temasek led the deal rankings in 2013, having completed 40 investments. It was followed by GIC, QIA, Kazanan National, and China Investment Corporation. Geographically, China was the target of the most deals, 26, by sovereign wealth funds in 2013, followed closely by the USA and India. Sovereign wealth funds' foreign direct investment in infrastructure more than halved from $7.5 billion in 2012 to $3 billion in 2013, due to more fierce competition from cash-rich commercial companies. In 2013, there was a significant increase in investment in infrastructure in emerging markets, totaling $700 million. This growth was led by Latin America, which has been a particularly attractive region. Currently, over 60% of sovereign wealth funds allocate at least 5% of their portfolios to property. Since 2006, sovereign wealth fund investment in global real estate markets has been dominated by 7 funds that have participated in over 75% of the nearly 200 sovereign wealth fund transactions in the intervening period. GIC, QIA, and Temasek have been the most active real estate investors by number of deals. Canada's pension funds are among the world's biggest. The top 4 total nearly $700 billion in assets under management. In total, they hold almost $1 trillion. Public investors prefer London to New York to settle their international offices. London houses 10 seats, while New York only has 8. 4 Canadian pension funds and 6 sovereign wealth funds are based in London. In Latin America, Sao Paulo has become the city chosen to land in the continent. CPPIB, Temasek, and GIC have already landed. The Norway Sovereign Wealth Fund held shares in 8,213 different companies in 74 countries. Since 1998, the industry composition of its top 10 equity holdings has changed substantially. Today's sectorial diversification is key. This diversification is even more evident now if compared with recent 2008, when 4 of the 5 largest holdings were oil and gas companies. In 2013, the top 10 includes companies from 7 different industries. GPFG's investment history contains a permanent bias in favor of European companies. Today, the GPFG owns 2.5% of all Europe's listed equities. We have focused on the role of Spain as recipient country for sovereign wealth funds investments. Between 2011 and 2014, sovereign wealth funds have made more than 13 billion euros of direct investments in Spain. The 2014 ESADEgeo Sovereign Wealth Funds report corroborates the solid weight of the emerging SWFs in the industry as a whole. This trend is in line with the increased weight of the emerging markets in the global economy, which is now more apparent than ever.